And welcome back. It's Jason Walter here, and thank you so much for joining me in today's video. I hope you guys are having an awesome day. I want to provide an update from Realtor.com, at least data from Realtor.com, and provide my own analysis based on their data here. But first, I actually want to share what's happening right now regarding rates, though, because have a look at this. As of today, which is January 12th, according to the Mortgage News Daily, average 30-year fixed rate mortgages, our average rates, I should say, it's at 6.07%. This is for the average 30-year fixed for people with exceptional credit. Obviously, this is approximately 1.3 percentage points less than the highs we saw back in the end of October. I believe it was actually October 20th to be exact last year, when rates were about 7.37%. So rates have decreased big time compared to the end of October last year. And rates for FHA and VA loans are actually below 6% right now. So look at this. Rates compared to 1 year ago, rates are at 3.52%. That's an increase of only 2.55 percentage points compared to 12 months ago. I say only because this difference here was very close to 4 percentage points just a couple of months ago because rates were increasing so much. And because rates went from about 7.3% in the beginning of November last year, now they're around 6.07%. That's going to be saving the average home buyer looking to buy an average price home in the United States approximately $240 per month in savings due to this decrease in rates from 7.3% down to about 6.1%. Now, don't get me wrong, because our housing market has a lot of challenges, though, because even though we look at the changes over the past few months here, or a couple of months, still, again, rates have increased approximately 2.5 percentage points. And that's obviously causing a housing affordability issue in the U.S. So that's the news I have regarding mortgage rates, but I actually want to provide an analysis based on Realtor.com's data in today's video. If you actually go onto their blog on Realtor.com, they have not provided a weekly update since December 22nd last year. They typically provide a weekly update regarding home prices, housing inventory, and price reductions. And I tend to provide my own analysis based on their data, though. But again, it doesn't even matter. They haven't posted their most recent updates in the past couple of weeks because I share my own data based on, or I share my own analysis based on their data here. So go to realtor.com/research/data. It takes you to this website right here. And you click on this link right here, it takes you to an Excel spreadsheet, which actually is more or less right here. So this is the data they provide among some other metrics as well in that spreadsheet here. But of course, I provide my own analysis based on their data though, right? So I'm gonna be talking about asking prices, housing inventory, new listings, days on the market, and also the share of price reductions and also the number of price reductions. I'm also going to be comparing the most recent week, which is the week ending December 31st last week, how that compares to 2017 all the way to 2021. So stay tuned for that as well. And of course, I'll share a summary at the end of this video as well. I'll also share some huge changes that could be coming to our US housing market based on the data I share today. So stay tuned to the end of this video as well. So let's talk about what we're seeing right now according to Realtor.com. Again, here's the website if you guys want to check this out yourself here. But here's what we're looking at. So here is asking prices, or the median asking price for newly listed houses. And this is compared to 1 year ago. So asking prices compared to December 31st, 2021 only increased by 9.6%. So we've had 4 consecutive weeks now where we only had single-digit increases of asking prices compared to the same time frame 1 year ago. And in fact, in 2022, these were the only 4 weeks, or only weeks, in which asking prices only increased by single digits. Because look at this, from December 3rd, all the way going back to January 1st, asking prices increased by double digits in the range of 10% all the way up to about 18% that we saw back in June, which of course is when we had all-time record highs for the median sold price in the US. But right now we're seeing single-digit increases of asking prices for 4 consecutive weeks now. Also, one thing to keep in mind here, these are asking prices and not sold prices. When talking about the median sold price in the US compared to June of last year, home prices have decreased about 10% according to data from Redfin. So nationwide, the median sold price has decreased about 10% ever since June of last year. So that's asking prices. Let's talk about housing inventory, because look at this. Housing inventory increased about 67.9% compared to the same time frame in 2021, increased by 68%. When looking at every single week back in 2022, this is by far the biggest increase of housing inventory on a year-over-year basis back in 2022. At 67.9%. And by the way, the previous week, which was December 24th, had an increase of 63%. And at that time, that was the biggest increase of 2022. But this last week actually surpassed that at about 68%. And by the way, a gain of housing inventory of 68% is more or less in line with what altosresearch.com is reporting as well, because they're reporting a gain of about approximately 200,000 houses for sale compared to 2021, which of course is a 67% increase on a year-over-year basis. Therefore, we have approximately 67 to 68% more houses listed for sale in the US right now compared to 12 months ago, which is pretty insane given the fact we've had fewer new listings hitting the market for the past 26 weeks now. So fewer new listings hitting the market, or fewer houses being listed for sale compared to the same time frame in 2021 for 26 consecutive weeks. Despite that, housing inventory has been increasing. Now it has increased approximately 67.9% last week. On top of that, as a note right here, housing inventory has been increasing in 15 out of the last 16 weeks in the US, despite declines of new listings for the past 26 weeks in a row. Therefore, this increase of housing inventory is not due to an increase of new listings, because those have been decreasing for the past 26 weeks in a row. So this increase of housing inventory is due to a pullback in home buying demand, as we're seeing fewer contracts being signed between buyers and sellers, and obviously fewer home sales. So speaking about that, let's talk a little bit more about new listings on a year-over-year basis here, because as a note right here, new listings have decreased by 26 consecutive weeks. By the way, of course, a new listing is when a home seller lists their home for sale. So last week, that was down by 23.3% compared to the same time frame in 2021. And so new listings have been more or less decreasing ever since early July of 2022. And despite this, housing inventory has been increasing since mid-May of last year. One thing I do want to mention is that it's entirely normal to have fewer new listings in the winter months, especially around the holidays. So I do get comments saying, of course, new listings went down this time of year, because they always do. But keep in mind, these are year-over-year changes though, right? So last week, decreasing by 23.3% compared to the end of 2021. So these are year-over-year changes here. So the changes we're seeing this year are much more pronounced this year compared to last year. Now, here's another trend we're seeing right now regarding new listings, because new listings have been decreasing on a year-over-year basis in 12 out of the last 14 weeks. The only weeks we actually saw single-digit decreases was the week ended December 3rd, as well as the week ended December 24th. And again, despite this, housing inventory has been increasing ever since mid-September of last year, which is pretty astonishing that we have more active listings, despite the fact we've been seeing far fewer new listings hitting the market. Now, here's another trend we're seeing right now, and that's regarding days on the market. This is the time frame when a home seller lists their home for sale until when they ultimately accept an offer from home buyer. That's days in the market, the time frame when they put their house up for sale, and then when they accept an offer. And it's only recorded when the house actually closes escrow or the sale is finalized here. So this is a lagging indicator of our housing market here. So for the past, past 23 weeks, houses are taking longer to sell compared to the same time frame last year. So houses are taking longer to sell for the past 23 weeks in a row. And last week, it's taking approximately 12 days longer to sell a house compared to the same time frame in 2021. And by the way, this increase of 12 days for days in the market last week is actually the biggest increase of 2022. The previous high was actually the previous week back in December 24th at 11-day increase. What's also pretty remarkable regarding this number here of 12 days, it's taking 12 days longer to sell a house from a year ago, is that 1 year ago, that number was actually negative 11 days, meaning it was taking 11 days faster to sell a house compared to the same time frame 1 year ago. Now it's 12 days longer, whereas last year it was 11 days faster here. So let's also talk about the number of reduced price listings in the US right now, because last week the number of reduced price listings only increased by 91.6%. I say only, even though that number is still very large, is that because the previous weeks or previous 4 weeks, we actually saw triple digit gains on a year-over-year basis here. So at 91.6%, or a gain of 91.6% compared to 12 months ago, this is actually the smallest increase since mid-October of last year, but we've been seeing triple-digit gains in the number of reduced price listings in 7 out of the last 9 weeks. So despite this small decrease that we saw last week, the number of reduced price listings has been absolutely skyrocketing over the past 2 months. And this is so much different compared to the first 3 months this year, because we actually saw decreases from 1 year ago. This is from the beginning of January all the way until the end of March. We actually saw decreases of price drops in the US. So that's a number of price drops in the US compared to 1 year ago. Let's also talk about the share of price drops in the US as well, according to altosresearch.com. So for the week ended January 6th of this year, the share of price drops was only 36%. 9 months ago, the share of price drops was 18%. So the share of price drops has more or less doubled in the last 9 months. However, though, the current levels right now at approximately 36% is at the lowest levels since the end of July last year. On top of that, the share of reduced price listings has more or less been decreasing since mid-November of 2022, because back then the share of price reductions was approximately 43%. However, though, when you look at the share of price drops compared to the past 3 years for that same time frame, we're still much higher compared to the past few years. Let me actually share that with you guys right now. No pun intended there. Let's have a look at the share of price drops according to altosresearch.com. So right now the share is approximately 36% right now. In mid-November last year, the share was about 43%. So the current levels right now at about 36% is more or less on par with the end of July, the beginning of August last year. But again, just like I said, when looking at the share right now versus the past few years, we're still at very much elevated levels, because at 36% right now, compare that to 1 year ago, the share was about 23%. And prior year to that was about 22%. And pre-COVID back in January 2020, the share was about 28%. Okay, changing gears slightly here, let's talk about how last week compares to years past, going back to December of 2017. And by the way, Realtor.com only provides data going back to July of 2017. I wish I could share, 2015 through 2016, for example, but I only go back to 2017. But look at this. I guess the best comparison would be actually 2018, where we had a year where interest rates actually were increasing. Not as much as we saw it back in 2022, but still they actually were increasing. So again, asking prices increased by 9.6%, which is below levels back in 2022 and 2021. But look at this giant increase of housing inventory that we saw last week, though, because obviously in 2022, 2021, we saw huge decreases of housing inventory because home buying demand was so strong. Back in 2018, it only increased by 5.8% compared to 2017. Now it increased by 68%. Also, new listings are down big time, down 23%, whereas in 2018, only decreased by 7.8%. Also look at this, because again, it's taking about 12 days longer to sell a house compared to the same time frame in 2021. Look at this, 2022, I should say really the week ended January 1st, 2022, as well as 2021, houses on average was selling faster compared to the previous year. So compared to 2020, for example, houses were selling about 16 days faster compared to the same time frame in 2020. Back in 2018, it decreased by 3 days, and again this year increased by 12 days. Also, the number of reduced price listings is so much higher, or the change is so much higher compared to previous years. Obviously, we saw huge decreases over the past couple of years because, again, home buying demand was so strong. But back in 2018, the number of reduced price listings only decreased by 6.3%, whereas this year increased by almost 92%. All right, I know that was a lot of information to cover in today's video. So of course, like my previous weekly updates I make for you guys regarding this analysis here, I want to provide a summary and then also some potential changes ahead regarding what we're seeing right now in the housing market. So number one, inventory has been rising in 15 of the last 16 weeks and rose by 68% last week. This growth in housing inventory is very much significant though, because we've been seeing a huge decrease of new listings. In fact, new listings have been decreasing for 26 consecutive weeks. And on top of that, new listings have been decreasing by double digits for 12 out of the last 14 weeks. Again, like I mentioned in previous videos, our housing market would look so much worse if new listings were absolutely skyrocketing, but in fact, they are not as of right now. Number two, mortgage rates have been decreasing more or less ever since January 1st of this year. However, average 30-year fixed rate mortgages average around 3.6% 12 months ago. Number three, we saw a huge increase in the number of reduced price listings over the past 3 months. And we saw triple-digit year-over-year gains in 7 out of the last 9 weeks. Additionally, the share of reduced price listings has more or less doubled in the last 9 months. However, though, it has been on a downward trend ever since mid-November of last year. And number four, houses are taking longer to sell compared to the same time frame 1 year ago for 23 consecutive weeks. Again, this is a lagging indicator based on closed home sales though. I expect this to continue to increase in the weeks and couple of months ahead due to our seasonality of our housing market and also due to this drop in home buying demand that we've been seeing here. Let's talk about some huge changes ahead, given the fact that we've been seeing average rates above 6% ever since October 1st of 2022. And number one, home buyers have been priced out of this housing market and or they're deciding to wait out this housing market given the fact that home prices have been decreasing and of course interest rates have been increasing compared to 12 months ago. So because mortgage rates have increased about 2.6 percentage points compared to 12 months ago, this is causing a 26% decrease in buyers' purchasing power. And number two, this is actually an important one. Something we should be definitely following here because rates have been decreasing so much. Again, they're very close to getting to below 6% right now. They're about 6.1% at the time of this video, which is January 12th here. So of course, we still have a housing affordability issue in the US. For an average person, for a person looking to buy a median price home today versus 12 months ago, it's going to cost them approximately $444 more per month to buy that same median price home today versus 12 months ago. And that's an increase of 35% in their average monthly housing payment. Again, though, this is based on principal and interest only, not taxes and insurance here. But despite this increase of $444 per month to buy an average price home today versus 12 months ago, housing affordability has actually been improving though, because we've been seeing this drop of home prices as well as interest rates here. So because of this, so for someone looking to buy a house today versus in the beginning of November last year, you're going to save approximately $240 per month to buy an average price home compared to the beginning of November compared to right now. And that's because interest rates went from 7.3% down to 6.1%. And number three here, we'll likely see more declines in home prices and especially home sales in the first quarter this year. I say over the past couple of months here, but I imagine it's actually going to be the first quarter of this year, especially home sales. This could be significant given the rapid rise in rates we saw back in 2022. And of course, this giant decrease in pending home sales that we saw in November. If you guys missed my previous video, about a month ago, I reported to you guys that we saw the biggest increase, or actually the biggest decrease of pending home sales on record going back to 2001, based on the National Association of Realtors data, if you actually exclude the onset pandemic. So excluding May 2020, the number of pending home sales as of the end of November in the US is at its lowest level on record going back to 2001. And that should equate to far fewer closed home sales in the next 1 to 2 months here in the US. I also expect our housing market slowdown will continue in the near term here. And we also could see negative year-over-year price growth very, very soon. So based on the most recent data we have from Redfin, which is the end of December 2022, they're reporting that the median sold price has only increased by 1% on a year-over-year basis here. So we're getting very, very close to negative year-over-year growth in the US right now. On top of that, according to Redfin last week, approximately 34% of the 50 most populous US metros in the US here have posted negative year-over-year price growth as of the end of November here. I should have an update, by the way, from Redfin probably in the next couple of days here, because at the time of this video, they have not published their weekly housing market update here. Number 4 here. To combat inflation, of course, the Fed plans to continue raising the federal funds rate. This increases interest rates for HELOCs, credit cards, and new auto loans, but saving rates, of course, increase as well. One thing very important to note here is that inflation has been winding down, though, so we should expect a slowdown in rate hikes from the Fed in 2023. In fact, the street is expecting the Fed is only increasing the federal funds rate by 25 basis points in February. That's what the street is forecasting for the increase of rates, or the increase of the federal funds rate in February when the Fed meets in their next meeting here. To give you some comparison here, of course, the Fed increased rates by 75 basis points 4 times in 2022, and now the street is forecasting for only a 25 basis point rate hike in February. And number 5 here, rates were above 7% for the vast majority of October, and we're starting to see the true effects regarding these high rates in November and December's stats that I've been sharing with you guys on the channel here. We've been seeing huge declines in closed home sales, huge decreases on pending home sales, along with price declines as well. Again, down by about 10% ever since June of last year. And by the way, the National Association of Realtors will not release December stats until late January. And of course, I'll make a separate video once they release that. They tend to release data 3 weeks after month end. That's actually one of the main reasons why I really like AltosResearch.com, Redfin, as well as Realtor.com, because they actually post more timely updates than the National Association of Realtors, as well as the California Association of Realtors. And lastly, subscribing is for free. And these videos, especially this weekly video I make for you guys, take me hours to make. So hope you guys appreciate this video. And of course, I appreciate you as well. I hope you guys have an awesome day. I look forward to seeing you on the next video.